In this presentation, I'm going to outline the MAV100 cooperative membership business structure. Here I will describe our accounting and transparency efforts. We are taking established business practices like GAAP accounting and board governance and integrating methods of decentralized consensus into decision-making and valuation. This is how membership in the 509 Telecommunications Cooperative will work. How do we distribute revenues? How do we pay expenses? How do investors get paid? How do we govern our business operations? How do we democratize participation in telecommunications and infrastructure? What does it mean to be a trustless corporation? First, we're going to start with balance sheet fundamentals. So with a balance sheet, both sides must balance. First, we're going to start with initial investment. We're going to start with membership. Members are going to invest $100,000 in cash. I'm going to record membership in account value for now. Understand that the number of memberships will be different than the value of memberships. 100,000 times theta will equal X memberships. Calculating theta here will look something like 1 over total assets divided by total memberships gives you the scalar value that we put here. Don't worry about this now. There will be a deep dive on this coefficient in another video. So these memberships are going to come out of the inactive treasury. And when people sell in later, that's going to go back into the inactive treasury. So the basic equation in double entry GAAP accounting, assets is equal to liabilities plus owner's equity. 100,000, 100,000, totals, balance. So in our company, membership is equal to owner's equity. When we make revenues, we make money, assets expand, membership expands. Right now we have $100,000 in cash. We want to turn that into something that generates revenue. So the first thing we're going to do is buy some radios. So we subtract $80,000 from cash, and we add $80,000 to radios. This still balances. We're still at 100. We're going to take these radios and we're going to install them and we're going to turn them into an asset that makes revenue. So what we've done is we've taken these radios and we've installed them. Installed infrastructure is worth more than radios on a pallet. So we have added $20,000 in value here, and we've added short-term expenses, payroll, of $20,000. So now we're going to cancel these out. So now we have $20,000 in cash, $20,000 in short-term payroll, and $100,000 in infrastructure. So now we go down here, we balance this out. Now we're going to pay some bills. We have to pay off this payroll. So we're going to pay $10,000 in payroll off with $10,000 in cash. Now the balance sheet shrinks a little bit. All right, option number 2. Somebody wants to work and stack their membership. So we subtract 10,000 up here, we add 10,000 down here, everything is even, we still balance. In this situation, the member got those 10,000 memberships instead of $10,000, so now their membership stacked, and this added to the total membership. We've built some infrastructure, we have a performing asset. People are buying cell, TV, fixed wireless, and internet service from us. They give us money. So this month we make $20,000 in revenue and we have $10,000 in labor. We made a profit. So now you'll see we have $130,000 on this side. We have $120,000 on this side. We're not in balance. We made some money. Our assets are greater than our liabilities. How do we deal with this? We're going to add and distribute membership. This $10,000 in membership reflects the fact that we made money, and this will be distributed proportional to all the members. But how do we actually deliver a return on investment? Now normally this process is centralized. someone decides it's time to distribute profits and they start writing checks. Our cooperative will use the algorithmic buyback account. Let's say that we had a great month. We made $50,000 in revenues and had $10,000 in labor. Typically, you'll pay off last month's labor, so we're going to pay off $10,000 in labors and take $10,000 in cash. We reconcile this. So we had a great month. Now our assets are 170. Our owner's equity and liabilities are 130. This means it's time to distribute membership. This brings us back into balance. And this is great and all. Our membership is expanded. Our owner's equity is expanded. How do people decide when profits are taken? That's how we use the algorithmic buyback account. What we're going to do is we're going to move $10,000 from cash into the buyback account. This is the account that our members will interface with to get a return on their investment. And this is our first introduction to a scalar coefficient, or theta, as it corresponds to how we operate our cooperative in a trustless and decentralized manner. Let us say we have about 1,000 memberships, and they're valued at $160,000. We are going to set the algorithmic buyback account theta to 0.0001. That way, if someone wants to go and sell one membership, they get 10,000 times 0.0001, or $1. They sell their one membership, they get $1. That means there's 999 memberships left, and we take $1 out of the algorithmic buyback account. The next person that sells a membership will sell it for 99.99 cents. Thus, everybody now has a different proportional amount of membership because there's only 999 memberships left, and the algorithmic buyback account is down to $9,999. Thus, when we distribute revenues, it's a decentralized process. That means that every member determines when they want to sell, when they want to stack. This is what it means to be a decentralized cooperative. Now let's say that we decided to move $20,000 into the algorithmic buyback account instead of $10,000. Thus, $20,000 times 0.0001 equals 2. Now, when someone sells a membership, they get $2. We subtract $2 from $20,000, and we subtract $2 from membership. Thus, when we put more money in this account, more people are obviously likely to sell as this price goes up. And now we're going to balance all this out. Now the algorithmic buyback account is down to $19,998. Next person that sells one will get $1.99. Here are our current balances, and that reflects that membership is now down to $159,998, and we have one less membership total. As the account grows and that price goes up, more people will decide to sell their memberships. As more people sell their memberships into that account, the price will go down. Thus, every member of the cooperative makes their own decision, and we have decentralized both the valuation and the distribution of revenues. This is just one step in creating a trustless corporation.